Right, welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. The first comments from Fed Chair Jerome Powell's testimony have just come in, and the narrative of the central bank being that they will not be in a hurry to cut interest rates. This narrative already in the markets, right?
Yeah, thanks, Anatim. I think Powell has been quite consistent in his messaging to the market, reiterating a very resilient US market and labor force that's largely in balance, and inflation moderating. Whilst it's not at that 2% level that the Fed is targeting just yet, the trend is certainly on a downward path. So it's a fine balancing act, and as Powell has reiterated, they're very data dependent. It's going to be all about where the CPI come in and how the labor market evolves as we go through the year. So I think these two key factors, the labor market and inflation, is going to be what's driving his interest rate decision ultimately, and the way forward for interest rates.
All right. Well, let's go to the AI wars, and Elon Musk is making a bid for OpenAI, seeming that he wants to own tech. A few years ago, we had him buying Twitter. Of course, CEO Sam Altman coming out to say that he's not really taking the bid too seriously. I mean, if Musk were successful in this endeavor, would it significantly change the AI landscape?
Yeah, I think you had a bit of a, call it a soft conflict between Musk and Altman with regards to OpenAI. Elon Musk was an early investor into OpenAI, and he is all about making sure that the non-profit side of OpenAI stays independent, and ultimately that's what he wants. And from Sam Altman's side, he wants to change it to a for-profit organization.
Okay.
So you've got a bit of this conflict coming through, but ultimately, I think it's a bit of a tactic by Elon Musk. Whether he is serious about buying OpenAI remains to be seen. $97 billion is a big amount.
Yeah.
He did pay $44 billion for Twitter, which is now X. But, this is a big acquisition, and I don't think it would be entertained from Sam Altman's side.
Yeah, lots of tactics there being implemented by Elon Musk and Donald Trump. It is going to be a very, very interesting time. Let's come back home and take a look at Implats, because it came out with an interim trading statement today saying that they expect their headline earnings per share to drop by as much as 49%. Did the macro environment here put a cloud on the performance?
So the PGM market, the platinum groups metal, has been quite challenged for over 2 years now. We've seen quite a steep fall off in terms of the prices for the PGM metals, as well as on the demand side. So the demand is largely driven by auto catalysts, which is for vehicle production and lowering those emissions. And that has been quite weak, as we've seen consumers holding on to their cars for longer, as well as the move towards electric vehicles. But I think, we've reached a point whereby demand is pretty much stable. We've seen from Implat's side that although revenue was down by 8%, there's a big leverage effect, and earnings therefore are going to be down between 40 and 49%. They did do quite well in terms of controlling the cost growth, and cost growth only grew by 3%, which is a very good outcome, because a large component of that cost is made out of labor and electricity, which is growing much higher than that 3%. So I think ultimately production was slightly up, and if you look at the sale of the PGM metals as well, that was also up. They had some stockpiles that they've sold to the market, and largely this trading update was a bit better than what the market was expecting. Okay. So that's why the share was up slightly on the day.
All right. Well, talking about shares that were up, Santam's share was up almost 3% today. They released their full-year trading statement saying that they expect their headline earnings per share to rise by as much as 60%. Not too much color over there. What did investors hold on to there?
Yeah, I think it's a very strong result, an update from Santam. They've always guided for their underwriting margin to be between 5 and 10%. But if you look at this trading statement that they've put out, I would expect that the underwriting margin is towards that upper level of 10, closer to 10% rather than 5.
Okay.
And if you look at it, I think there's quite a bit of investment gains. So insurance companies make investment gains on the float, essentially the capital that they hold. And I think that would have also come through because markets have performed quite strongly over the last year. And if you look at it from an underwriting perspective, it looks like although you had some large weather-related claims, ultimately the diversified portfolio that Santam has would have buffered them from large claims affecting their overall portfolio mix.
All right. Well, Imtiaz, let us get to your stock pick for today. What are you choosing?
Yeah, so I'm going with Nedbank. Nedbank is due to report their results soon. I think what you're going to see come through quite consistently is an improvement in the credit loss ratios for Nedbank in particular, but all of the banks. And if you look at it from a consumer's perspective, whilst the consumer has been in a tough space, they haven't leveraged up their balance sheet that much, which means that credit loss ratios should be in check. And then you've got the non-interest revenue side, which has also been growing quite strongly. Nedbank has a big exposure to the property market, and that has also recovered quite strongly. So I think overall, if you look at it from a valuation perspective, trading on a forward PE of 7 times, price to book of 1.1 times, and a decent dividend yield of 8%. So I think that's good value coming through there.
All right. Well, thank you so much for your time and giving us your analysis on what has moved investors' money today, Imtiaz. That was Imtiaz Suliman from Sentio Capital.